Welcome back to my session. Welcome to week 5. This is going to be another amazing video. If you guys have already been enjoying the last 4 weeks that I've been posting video every week, you're gonna definitely enjoy this video. So first and foremost, I wanna show a little gratitude to my subscribers that's been, really watching my content religiously. I'm truly grateful for you. Just wanted to take a second to show a little bit of appreciation, because the reason I do this is to help others learn, right? I already know how to trade. Now I want to share the information because, like I said in a previous video, the education system don't just give this to us. There are people out there that charge thousands of dollars a month just to get this information, all right? So I just want to start with that. But with that said, guys, we're getting into Bollinger Bands today, just like how I promised you last week. And this is where it starts to get just a little juicy. This is where it starts to get a little juicier, and you're going to start to understand how things start to play their parts. I'm going to give you a few seconds. Go get your pens. Go get your notebooks. Or for all my technology people, go get your tablets or your laptops and get ready to learn some information. With that said, I'll see you guys in a second. Bollinger Bands. Today I'm going to get into what is a Bollinger Band and how to use it for your trading strategies. So there's a lot of videos out there that explain Bollinger Bands, and honestly, they are very complicated. They're very complex. Like, they use all of the complex terminologies, all of it. I'm not going to do that. I'm going to make this very simple. Like I said, that your 10-year-old is going to be able to trade Forex. That's how simple I want to make this. To get right into it, what Bollinger Bands are is, I like to think of this as rubber bands. The way the Bollinger Bands work is whenever the market gets within the band, there's a reaction. Now, before I get too deep into that, you have this top band here where my cursor is. Hold on, let me make this a little bit more simple for you guys. Okay, so you have the upper band, which is this right here, and then you have the lower band, which is that, right? So now, the way this works is whenever the market gets within the upper band or within the lower band, something happens. Now, there's either two things that's going to happen. It's either the market is going to continue to go up or the market is going to continue to go down. But to make this very simple is every time, think of Bollinger Bands just like rubber bands. Every time the market stretches that Bollinger Band, let me zoom this in a little bit. Every time the market stretches that Bollinger Band, for example, in this case, on the upside, when the market stretched the Bollinger Band here, what did you see happen? It got rejected. So it's almost like I said, it's almost like a rubber band. It stretched out and then came down, right? So that's what you can expect utilizing the Bollinger Band. And now you see it came back again. It didn't fully give me the move, so you know what? I'm not going to count that. But we have it again right here. The market now is on the downside. The market came down to the bottom Bollinger Band, just like a rubber band. And then now back to the upside. So notice how it doesn't get completely rejected until it breaks below that band. In this case, it broke below the lower band. In this case, you see it broke above the upper band. So that's why you had that movement, that reaction. So the Bollinger Bands are like rubber bands. When the market stretches the top Bollinger Band too much, you get a rejection on the downside. So that gives you confirmations to take sells. Whenever you see the market breaks below the lower band too much, that's the indication where you can start to take buys. So I'm gonna get into depth a little bit better on how to use it, but I just wanna explain a little bit what it actually is. Now, if you wanna be technical, Bollinger Bands are a statistic. It's a mathematical statistic equation called standard deviations. So what these Bollinger Bands are, it's actually standard deviations on both ends. So now, if you guys don't understand, standard deviation, like I said, that's a little technical. So I want to stay away from the technicalities. I just want to make this simple, right? So as you notice here, in every instant, whenever the market breaks way below that band, that lower band, you get that immediate reaction. Right here again, breaks way below, you get that reaction. Now right here, it broke above, you get that reaction, right? Very simple. Right here, it broke above, you get that reaction. Again, get that reaction. How do we use Bollinger Bands? I'm gonna tell you guys this right now because a lot of new traders make this mistake in the beginning. Just because the Bollinger Band gives you a confirmation, for example, the market, you see how the market broke below the band, but it kept going down? Just because it broke below at this point doesn't tell you it's time to take buys. Just because it broke below here doesn't tell you it's time to take buys. Just because it broke here doesn't mean it's time to take buys. And I want you guys to notice this like ASAP, because a lot of new traders tend to take a position just because the market touched the band. Now, that's not a confirmation, okay? That's not a confirmation. First and foremost, you want to trade with the trend. So if the trend is going up, you only want to take buys. If the trend is going down, you only want to take sells. So let's say, for example, this market is, we say that this market is trending down, which it is, right? Let's say this market is trending down. You only want to take the sell positions that the Bollinger Bands would give you. For example, right here, that would have been a position, right? Help me find some positions. This would have been another position. Let's see if I have any more. Nope, I have no more examples here. But that's just an example. Now, just because this happened, so let's zoom into this real quick. Just because this happened in the market doesn't mean you automatically jump into the sell either. Okay, and I want you guys to understand that. Now, Bollinger Band confirmations aren't good enough to take a position. What you're gonna want to do is add extra confluence, extra confirmations on your position. Now, as we move forward with this this weekly training, you're gonna understand how to mix Bollinger Bands with other indicators and other strategies, so you can actually use these within your trade. So now I want you guys to notice something. When the Bollinger Band is moving sideways, pretty much when the bands are parallel to each other, the market is in consolidation, right? I want you guys to notice this. When the Bollinger Bands move parallel, the market is pretty much in consolidation. Now, we already know consolidation is pretty much when the market is bouncing back and forth between support and resistance, right? So you guys see that. Now here's a powerful thing I want you guys to also see. I'm gonna make this a different color. Make this red, okay? There's a powerful thing that I want you guys to see. Once the Bollinger Band starts to break that narrow movement, that parallel movement, and you see it start to break out on opposite sides. So you see how this started to break up and this started to break down. That tells you that the market is no longer consolidating. That tells you that a big move is getting ready to happen in the market. As you see, the market pulled down, but then it shot up, and then you had this massive drop and then a massive up. And you see, every time the Bollinger Bands are spread widely away from each other, that's when you have high volatility. Now, Bollinger Band is an indicator that also measures the volatility in the market. How fast is the money coming in and out? You can learn, you can understand that just by how the bands look. If the bands are parallel, moving pretty much, you know, at the same, in the same place, market's consolidated. When it starts to open up, that's when there's a lot of volatility in the market, okay? It's very simple. Now, this is a very simple guide on how to use Bollinger Bands. Now, another way you can use this is whenever you do take the position, like let's say for in this example right here, let's say you took this buy right here. You can almost expect that the market is going to reject at this middle band right here. This is the moving average. I'm not going to get into moving averages today. You know, that's going to be on a later video. But you can almost expect that the market is going to reject at the moving average. As you see here, the market went up, pulled down, went up. And as you see, there's a huge wick to the upside right here. That was the rejection that I was talking about. It wasn't a long rejection, but it was a rejection, right? So now when the market breaks above that moving average on an uptrend, that moving average now becomes some type of support. And in the opposite direction, if the market breaks below the moving average and retest, that moving average is now considered resistance. So when you start to add this with actual support and resistance in the market, you get high confluence of your positions. You get a little bit more confirmation to take your trade. Wow, now that was a quick overview on how to use Bollinger Bands, and I'm super excited because, you know, in the later videos, next week I'm gonna talk about stochastic as I promised, but in the later videos, I'm gonna show you how to put all of this together so you can start to formulate a strategy. You know, I can pass you guys, I'll give you guys the strategy that I used to use when I first started trading. And the reason I'm recommending this, especially for new traders, is because it's very simple. Now, I'm going to tell you right now, to be a great trader, you have to have mental discipline, okay? You can't take every position. What I always recommend is waiting for your positions, waiting for all of your confirmations, then you take a position. You don't want to say, I think this looks good, I think, If you have to feel that way, if you have to be nervous getting into that trade, you probably should not take it. If you like my videos, if you really appreciate the information that I pass on to you guys, please like, subscribe, go share with your friends, go share with your family members. And let's keep growing this family, guys. Remember, I am not a financial advisor. I do not tell you what to do with your money. I do not give you financial advice. I do not tell you what trades to take or what investments to make. I'm just here to share education. If you guys want to learn a little bit more, a little quicker, and you don't want to wait on these weekly videos, please feel free to reach out to me. Right? Reach out to me through email, reach out to me through, the comments, reach out through Instagram. In the description below, I have the link to my Instagram. I have the link to my site where you can actually reach out to me directly. You can go to my site, fill out the Google form, and I'll connect with you. Okay? So with that said, guys, enjoy your day. I hope you guys have a blessed day, and thank you for hopping on. Feel just like a rock star.